Hello everyone, and welcome to today's in-depth analysis. We're thrilled to have you join us as we navigate the ever-evolving landscape of the cryptocurrency market. Today, we're diving into a major event in the crypto world, a development that has the potential to reshape the dynamics of a specific cryptocurrency and its community. This event has been long anticipated and is now on the horizon, promising both excitement and uncertainty. We're talking about Pi Network's upcoming token unlock, scheduled for July 4th, 2025. Mark your calendars because this is a date that could have significant ramifications for the Pi Network ecosystem. This means millions of previously locked Pi tokens, currently held within the network's infrastructure, will suddenly be available for trading on the open market. This influx of new tokens could have a profound impact on the existing supply and demand dynamics. For holders, buyers, and crypto watchers alike, this event presents a unique set of considerations. Whether you're a seasoned investor or new to the world of crypto, this is a pivotal moment, demanding careful analysis and strategic decision-making. The Pi Network has built a massive community, attracting millions of users worldwide with its innovative approach to cryptocurrency mining. It achieved this by making crypto mining accessible directly from your phone, removing the need for expensive hardware and technical expertise. This ease of access has been a key driver of its widespread adoption, but its token has seen wild swings in value, reflecting the inherent volatility of the cryptocurrency market and the speculative nature of many digital assets. With this unlock on the horizon, the market is bracing for potential volatility, an increase in trading activity and price fluctuations. This presents big risks for those unprepared, but also big opportunities for savvy traders and investors who can navigate the market effectively. In this video, we'll break down exactly what a token unlock is, explaining the mechanics behind it, and the potential consequences it can have on a cryptocurrency's market dynamics. We'll delve into why it matters, exploring the significance of this event for the Pi Network community, and the broader cryptocurrency ecosystem, and of course we'll analyze what it could mean for Pi's price, examining potential scenarios and offering insights into the factors that could influence its future trajectory. Millions of tokens hitting the market at once represents a substantial increase in the available supply, and is no small event, potentially leading to price adjustments and shifts in market sentiment. For Pi, which is still actively finding its place and establishing its long-term viability in the crowded crypto space, this token unlock represents a crucial test, an important challenge that will shape its future prospects. The market's reaction to this influx of new tokens will ultimately reveal the true demand for Pi tokens and provide valuable insights into its long-term sustainability. It's a real-time lesson in supply and demand, illustrating the fundamental principles that govern market dynamics and price discovery, and we're all watching closely, eager to see how the market responds and what the implications will be for the Pi Network and its community. We'll cover the basics of token unlocks, the numbers behind Pi Network's unlock, key price levels to watch, and assess the overall health of the Pi ecosystem, examining its development activity, community engagement, and real-world use cases. By the end of this analysis, you'll have a clear understanding of what's at stake for Pi Network, and what key indicators to watch as this significant event unfolds in the cryptocurrency market. So, what exactly is a token unlock? Let's break it down and keep it simple. In the world of cryptocurrencies, the term token unlock refers to a pre-scheduled event where previously restricted or locked tokens become available for use or sale in the open market. These events are a fundamental part of many crypto projects' tokenomics, and understanding them is crucial for anyone involved in the space. Crypto projects often lock up a significant portion of their tokens. This is a common practice employed by many blockchain-based ventures. These locked tokens are typically held by the project team, advisors, or early investors. This includes the founders who have dedicated themselves to the project's success and growth, and also early investors who provided the initial capital to get the project off the ground. These individuals and entities play a vital role in the project's development and long-term viability. The primary reason for this lockup is to prevent a massive sell-off or dumping, which could lead to a drastic and destabilizing price crash. By restricting the supply of tokens available on the market, projects aim to maintain price stability and investor confidence. These tokens aren't locked away forever. Instead, they are released according to a predetermined schedule, often outlined in the project's white paper or tokenomics documentation. This schedule dictates when and how many tokens will be unlocked and made available to the market. This scheduled release is what we call a token unlock. It's a critical event that can significantly impact a cryptocurrency's price and market dynamics. To visualize it, think of it like opening a dam. For a period, the water is held back, accumulating potential energy. Then, suddenly, the gates open, and a flood of tokens can hit the market, increasing the circulating supply. This controlled release mechanism is standard practice in the crypto world. It's carefully designed to manage the token supply over time, aiming for a balance between incentivizing early participants and preventing market saturation. So, why does all of this matter to you, the investor or crypto enthusiast? Because the fundamental principle driving price movements is the relationship between supply and demand. It's a core concept in economics, and it applies directly to the cryptocurrency market. When a significant unlock event happens, the available supply of a token can suddenly jump, sometimes dramatically. If a large number of token holders decide to sell their newly unlocked tokens, the increased supply can overwhelm demand, and prices can drop, sometimes quite fast. Due to this potential for price decline, token unlocks are often viewed as bearish indicators, at least in the short term. The market anticipates the increased supply and the potential for selling pressure. As a result, experienced traders and investors keep a close watch on these unlock dates, carefully monitoring the market for any signs of increased selling activity. They understand that a substantial sell-off could be on the horizon, presenting both risks and potential opportunities. The magnitude of the unlock event is directly proportional to its potential impact. The bigger the unlock, the greater the potential for significant price fluctuations. In the specific case of Pi, the upcoming unlock isn't just a trickle of new tokens entering the market. It's projected to be a tidal wave, a massive influx of tokens that could reshape the market dynamics. Consequently, the entire market is bracing for the potential impact, anticipating significant volatility and price adjustments. Therefore, understanding this fundamental dynamic of token unlocks is absolutely key to making informed decisions and predicting what might come next in the ever-evolving world of cryptocurrency. Let's look at the numbers. On July 4th, 19.2 million PI tokens will be unlocked, the largest single-day release for the month. But that's just the start. June and July together will see about 337 million PI tokens unlocked, roughly 4.1% of the total supply. July alone will see 268.4 million tokens released, the highest monthly unlock until late 2027. The risk? If many recipients sell, the market could face a supply shock. Even strong projects can see prices tumble if new supply overwhelms demand. The big question: will there be enough buyers to absorb this wave? The answer will shape Pi's price in the coming weeks. All eyes are on how the market handles this sudden flood. Let's talk market basics: supply, demand, and price. When more tokens hit the market, selling pressure rises. Early investors finally able to sell may rush to cash out. If many do, sell orders can swamp buyers, forcing prices down. Trading volume matters too. A liquid market can absorb more selling, but Pi's trading volume has been dropping. Low volume means even moderate selling can trigger sharp declines. With 19.2 million tokens unlocking in a thin market, volatility is almost guaranteed. If most of these tokens hit exchanges, prices could quickly revisit old lows. Analysts warn that without strong buying, Pi could see a steep drop. The market's depth will be tested like never before. This is a classic crypto stress test. The outcome depends on how many holders decide to sell. Let's dive into the crucial price levels that could dictate Pi's next moves. Understanding these levels, specifically support, is paramount for anyone looking to navigate the Pi network market. These aren't just arbitrary numbers, they represent areas where buying interest has historically emerged, potentially halting further price declines. And resistance are key to understanding market dynamics. Resistance levels, conversely, indicate price points where selling pressure has previously overwhelmed buying interest, leading to price reversals. Identifying these zones can provide valuable insights into potential entry and exit points. For Pi, a significant resistance level to keep an eye on is at 50 cents. This price point has acted as a ceiling, preventing the price from moving higher on multiple occasions. Every time the price nears it, sellers push back, creating a barrier that's proven difficult to overcome. This consistent rejection suggests a strong concentration of sell orders at this level. Breaking decisively above 50 cents would be a significantly bullish signal, potentially opening the door for further upward momentum. This would indicate that buyers have finally overpowered the sellers at that level. However, the upcoming unlock event introduces a layer of complexity and makes that breakout tougher to achieve in the short term. The increased supply from the unlock could exert downward pressure on the price. Shifting our focus to the downside, immediate support for PI currently sits at 47 cents. This level has provided a cushion, preventing the price from falling further in recent trading sessions. As of July 3rd, PI is precariously positioned just above this level, a critical juncture that could determine its immediate trajectory. The market is currently testing the strength of this support. If it fails to hold, and the price breaks down below 47 cents, the next significant stopping point is likely to be around 40 cents. This is the next line of defense against further declines. Notably, 40 cents also represents PI's all-time low price, a level that holds considerable psychological significance for many traders and investors. Therefore, 40 cents acts as a psychological floor for the market, a point where many believe the price is unlikely to fall below. It's a line in the sand for many participants. However, if the price decisively breaks below this crucial 40 cents level, it would signal a significant shift in market sentiment. It's uncharted territory. We would be entering a phase of price discovery with no historical precedent to guide us. No historical support below exists to provide a safety net, making it difficult to predict how far the price could potentially fall. This is precisely the level that experienced traders and financial experts are watching most closely, as it could trigger a significant market reaction. The impending unlock event could act as a catalyst, potentially pushing PI to test these critical support levels much faster than anticipated. Of course, if buyers step in aggressively at these levels, we might witness a strong bounce back, indicating renewed buying interest. Conversely, if buyers remain hesitant, the price could fall sharply, potentially leading to a more significant correction. Ultimately, these key support and resistance levels will play a decisive role in determining the short-term fate of PI, shaping its price action in the coming days and weeks. Therefore, it's crucial to watch them closely and monitor the price action as the unlock event unfolds, allowing you to make informed decisions. The 40 cents level isn't just a number, it's PI's all-time low and a critical psychological barrier. If buyers defend it, PI could stabilize or even rebound. But if it breaks, panic selling could accelerate losses. The PI core team has a strong incentive to keep the price above 40 cents to maintain its market cap ranking. Dropping below could hurt confidence and visibility. Recent price action is already shaky. PI dropped 16% in 24 hours, over 21% in a week. Sellers are in control even before the unlock. Technical indicators show heavy stress. Bollinger Bands are at the lower edge. RSI is nearing oversold. In a downtrend, oversold can last. The market is bracing for impact at this level. If 40 cents fails, there's no clear floor below. This is the make-or-break moment for PI in the short term. Price isn't everything. PI is more than just a token. Its real strength lies in its ecosystem and community. Over 7,900 AI-powered apps have been built on PI, showing strong developer engagement. These apps drive real demand for the token, beyond speculation. PI's global community, built through mobile mining, is massive and active. A strong community can support a project through tough times. But even with a vibrant ecosystem, market forces can overwhelm in the short term. The unlock is immediate, ecosystem growth is gradual. PI's challenge is to survive this storm and realize its long-term vision. The next few weeks will be a true test of its resilience. Ownership matters. PI's supply is highly concentrated. The top 100 wallets hold over 96% of all PI tokens. This whale dominance means a few holders can move the market. If even a handful decide to sell after the unlock, prices could plunge. The fate of PI's price rests with these large holders. The community must trust that whales won't dump all at once. If they believe in PI's future, they may hold or sell slowly. But if they cash out, smaller holders could be left behind. This concentration is a major risk as the unlock approaches. So what's next for PI? The battle at 40 cents will decide the short-term trend. If buyers defend it, PI could bounce back toward 50 cents. If selling overwhelms a break below 40 cents could trigger panic and deeper losses. The decisions of large holders and the strength of the community are crucial. Broader crypto market sentiment will also play a role. PI's fundamentals show promise, but technical pressures are intense. The next days and weeks are critical. Will PI weather the storm or face a steep decline? All we can do now is watch as this pivotal event unfolds. Stay tuned for updates.